the company. Afternoon, Mr. Sehgal, and thanks so much for joining in. Your numbers are below expectations. The revenue growth is only 8% this quarter. So clearly there's been a slowdown. Has there been a slowdown across demand in Europe?
No, I don't have any reason to doubt that this revenue won't grow more than what it is showing here, because on a 9 months basis, the growth is actually 11%. So one quarter is at 8. I do not know why we would look at it at a lower number. But I think all these particular things are depending upon the car maker, and as the car maker orders to us, we supply to that. So for us, we really can't control the top line.
Mr. Sehgal, hi, good afternoon. Let's talk about the businesses one by one. SMP has seen slowdown in margins to 6.1% versus 6.7% quarter on quarter. Has there been any pressure there?
No, you should take that into cognizance that there are two things. One, Brazil, we have written off one-time asset impairment of about 30 crores. And last year, quarter on quarter, we had an additional income of the insurance amount, which was almost about 57 crores. It was a one-time settlement of our Polinia plant, which had caught fire. So if you put all of this in perspective, actually the EBITDA is phenomenal. They've done phenomenally well. Their EBITDA has grown more than 29-30%. And SMR, in fact, is the highest ever. They've crossed their 10% plus EBITDA. So phenomenal performance by both of them. So if you look at these two things amongst SMP and SMR, you'll see that SMR PB has given very, very good numbers under the circumstances.
Okay, so do you believe the margins of SMR, which stand at 10.6% now, are sustainable?
I hope it's not sustainable. In fact, it should be improving. So as their new plants have come into this thing, you see, we've attached 17 new plants that are working in different things, of which 7 plants will be reporting for the last time because they have now been handed over to the production. So all these particular things are coming to their capacity ramp up and things like that. So in fact, the turnover for the first time in 9 months, they have crossed €1 billion. And EBITDA margins are at the highest. So I think their performance will improve even better.
Okay, what is the order book for SMR currently? And at the end of the first half, it was 3.9 billion euros. Any fresh orders in Q3?
I think the total order book we've guided you in the last 6 months. We won't guide you in this quarter. The next quarter, the fourth quarter end, we will guide you the total order book, which is there for every company. So what we do is every 6 months we give you the order book, and every 6 months we give you the new plants that are coming up in the group. So this time it's new plants coming up in the group. But we have overall, I think if I'm not wrong, SMR PBV has about 12 billion.
Okay, there is a lot of concern about slowdown in the European market. So will you then stick to your $18 billion revenue target for 2020?
No, we are very confident that our growth will sustain. We have given a clear guidance in 2020 that we will be an $18 billion company, and we are well on our way to do that. I think the distinction between Motherson and the other companies which you are trying to compare us with is the fact that we are always increasing content per car. So the growth in automotive industry is not a driver. I mean, it is a small driver. What is a bigger driver is the additional components that we keep on adding into our range. So at the moment, Motherson is about almost 1,100 components. So maybe by 2020, we'll be about 2,000 components. So it's the increase of the content per car which drives Motherson. So if you compare it only with the car growth, it's probably a fallacy.
Okay, the stock is not recovering. In fact, it's now down 12%. So clearly, a lot of pressure on the stock. Mr. Sehgal, SMP has a big exposure to the China market. How does demand look in China?
Well, it's a bit, how do you say, very difficult to project. But we are seeing it limping back to normalcy. And the bigger cars are not selling so much or something like that. But the medium and the small cars are doing very well. So we are okay because our range is completely all throughout. So one segment may come down, the other segment goes up, one part will come down. But for example, in SMR PV, the mirrors are doing very well. So the S&P is also doing very well. So we're okay with that. Our job is to make sure that every country, our plants are operating well and efficiently enough to generate profits. And that's the more important part for Motherson. We believe very strongly in top line vanity, bottom line sanity, and cash in bank reality. So I think this quarter exemplifies what we are talking about, even though it looks like the top line is a bit on the lower side for considering Motherson's 38% CAGR. But still, look at the performance of the company. It's exceptional. It's exceptional, I think.
Okay, even the balance sheet worries have spooked the street. Do you plan to reduce your debt, and if yes, how?
Excellent question. I think, first of all, what you should be seeing is on the balance sheet, what is the debt? On the balance sheet, the debt is only 164. In fact, we have brought it down in 31 March 2015 from 387 to 164. The total amount payable due within a year is only 227 crores. And 4,500 crores is a mismatch because of the growth that's happening. New plants are coming, capexes are coming in. And so we will keep adjusting it as the requirement is. But also the euro, which has to be reported in our balance sheet, is in rupees. So that also makes an effect. So we are not at all worried about our debt. Our debt is less than 1.1 times our EBITDA for the total debt. So I don't understand why the market is worried about it, because we are not worried about it at all.
Okay, final question then, Mr. Sehgal. You did mention your 18 billion target for 2020, but the market wants to know near term. What about end of FY16? If you could give us some picture on that.
Motherson thrives when there is disturbance all around, and it thrives even more when there is good news all around. So we are in the acquiring mode. 18 billion will not be done without acquires. The more the trouble in the waters, the more the opportunities that come to us, and that much more cheaper. So all I can tell you is, we just need 1 or 2 acquisitions to happen, and we will cross our 18 billion. We are not even worried about that. We are focusing on exactly on the operational excellence, and there is a team which is focusing on the acquisitions. We are doing due diligences, but I can't share with you anything just now.
All right, Mr. Sehgal, thanks a lot for your time today. Unfortunately, for the bulls of your stock, it's still down about 12%. Let's get an analysis of that stock going. We have Rohan Kode of Prabhudas Leeladhar also joining.